Hi, welcome to Slay the Spider. I'm Jim B, and I'm the creator and host of Slay the Spider. Shares of the S&P 500 are called S&P Depository Receipts, SPDRs. Spiders. Slay the Spider means I intend to beat the S&P 500 quite substantially. There are three major influences on the movement of stock price, according to a study by Benny King. 80% of your investment success will be due to the movement of the sector and the market. Now you can view a weekly snapshot image of the market and the sectors. This is a snapshot from April 9th, 2021. The red arrow, pointing towards the 2 o'clock position, represents the market. The rectangles each represent a mini-sector. They are color-coded to the sector they represent. Healthcare mini-sectors are in red, technology is dark blue, financials are green, media communications are brown, industrials are purple, consumer discretionary are light blue, and all the others are gray. I've been charting this movement since 1998 over more than 25 cycles using this exact mix of 40 mini-sectors. The key to understanding the movement and what makes the cycle predictable are the psychological stages that investors experience as they go through complete market cycles. It rarely changes. These stages are on the outside border of the circle. The placement of the sectors and the market are completely data driven. The interpretation of what to expect next is from my experience of going through the cycle dozens of times. I'm not always perfect, but the beauty of the circle is that it corrects me quickly when I don't get my prediction absolutely correct. I've learned it's okay to be wrong now and then, but absolutely abysmal to stay wrong when the data says otherwise. The movement in the sectors were very negative. In fact, we had only one sector that was unchanged and one sector advanced. In first in the health sector, all three sectors declined. In media communications, all three sectors declined. In technology, semiconductors declined and crossed to the bear side. Electronics declined and crossed to the bear side. Software and computers both declined. In the consumer discretionary stocks, all six stocks or sectors declined, and autos declined and crossed to the bear side. In the financials, all six sectors declined, and Wall Street declined and crossed to the bear side. In the industrials, all seven sectors declined, and machinery tools declined and crossed to the bear side. In the others group, we had everything decline with the exception of precious metals advanced and electric utilities were unchanged. This week, one mini sector remained unchanged, one advanced, barely, and 38 sectors declined. Five sectors crossed from the bull side to the bear side, none crossed from the bear side to the bull side. We now have 8 sectors on the bull side and 32 on the bear side. Overall, the market score last week was 35. It's now at 20. For the week ending January 21st, the S&P 500 is now at 4,397, down 265 this week, or 5.68%. Year to date, it's down 8.3%, and from its all-time high, 8.7%. The Dow Jones is now at 34,265, down 1,646 points this week, or 4.58%. Year to date, it's lost 6.3%, or from its all-time high, 7.3%. Nasdaq's now at 13,769, down 1,125 points, or 7.55% this week. Year to date, it's down 13%, and from its all-time highs, 15.1%. This past week, 441 stocks went from buy signals to sell signals. We added 8 new stocks to the database. There are now 33% of the stocks on buy signals and 67% on sell signals. It's the worst we've seen in the last 52 weeks. Overall, the market score last week was 35. This week it's 20. The sector performance for the week ending January 21st. The best performing sector was real estate, and it lost 2.9%. The worst performing sector was consumer discretionary stocks, losing 8.2%. The S&P 500 lost 5.7%, and NASDAQ lost 7.5% for the week. Year-to-date sector performance for the 3-week period, January 1st to the 21st. There's only one sector that's in positive territory, which is energy, being up 12.5%. It lost about 3% this last week. All the other sectors are in negative territory for 2022. NASDAQ is down 13% for the year, and the worst performing sector is consumer discretionary stocks, which are down 11.8%. Technology is down 11.3%. Healthcare is down 8.2%. Real estate's lost 9.5%. Industrials have lost 4.3%. Finance is down 2.2%. And that's it. This is a chart of the 10-year Treasury bond yield year to date. On January 1st, the 10-year Treasury yield was 1.51%. It closed Friday at 1.747%. And the drop we saw from Thursday to Friday represents a flight to safety. What was happening overnight is that investors were selling their stocks, and that means that the money coming out of the stocks automatically goes into money markets, and therefore the demand for treasuries goes up substantially without even investors realizing what's going on, that they're buying treasuries by owning money markets. So that big jump represents a flight to safety in view of rapidly declining market. This past week marked the end of the first year of the Biden presidency, so I thought we'd look at the sectors for that first year. For comparison purposes, the S&P 500 was up 14.49%, and NASDAQ was up 1.67%. The best performing sector was energy. It was up 48.44%. Second best performing sector, was real estate, up 27.35%. Financials were up 25.9%. Technology was up 16.2%. The industrials were up 14.5%. Healthcare was up 10.10%. Consumer discretionary stocks were up 6.07% for the year. And I just found it rather surprising that the very best sector under the Biden presidency was energy, which is dominated by petroleum products.